Fed just hiked 75 basis points. This is the biggest in last 30 years. But the market, it's responding differently. Interest rates are going up, the cost of money is increasing, but the assets here are moving up. What can be the reason when you are actually finding this? One, you broke below, you're going to retest this level. Maybe you're going to get rejected and you're going to go lower. Who knows? But if you look at different currencies in different time frame, you are like, okay, fine, we do have resistance coming up. First one for XRP is going to be 0.37, and then you have 0.45. Now you need to surpass that, but at the same time, if Bitcoin is not breaking above 30, it's going to be a hard part. But historically speaking, Bitcoin drops to the 200-day moving average and bounces from there. Fine. At this time, you have your RSI also pointing to that direction, saying, okay, we are oversold, extremely oversold. So right now, you have your indicators suggesting the market is extremely oversold, and you don't actually need to look at the indicators to measure whether the market is oversold or not, right? Because you go to the top, the recent high for Bitcoin, and you look at this like, okay, we are 70% down, so that's like 71% down. So now if you take this previous drop, it's 60. Okay, if you take it from the highs, it's like 70%, close to that. So it's like, okay, more or less, we are somewhere in that same territory. So followed by that, last time we had a rally. Okay, you have done the wave 1, you have done the wave 2. So what you are anticipating here is not that wave 2 massive rally. It will be shorter than the last one you had. So the question would be like, okay, how much high it can actually go? Wave 1 for Bitcoin was 3x. Fine. So you are anticipating somewhat like 3 to 4x max. That puts like, okay, $80,000 to $90,000 per Bitcoin. Fine. But this is crypto market. You have seen the averages of moving like 3 to 5x in wave 2. Right? If you put the actual math, you are getting 5x of this here in wave 2. Usually the elite pay structure is 2 to 3 times, but you got 5 times. So your probability of going to 95,000 per Bitcoin is still possible. Now, if the market becomes euphoric, you get a lot of volume coming in. Like right now, you have $103 billion in USDT, which is slowly coming into the market. You look at this, the direction is moving out of USDT. The direction is moving out of USDC. It's moving out of the stable coin, and it's coming into different assets. So if I say different assets and we look at the market, we are like, okay, XRP is one of them. The price is bouncing hard. Now, if you look at the entire market, you're going to get a lot of different assets. But before you enter into any of those, make sure you understand what that asset is. Make sure that decision itself is correct. There's a lot of steps which you can actually follow like you do in the stock market, right? If you do that properly, if you take your time, do your due diligence before you put your hard-earned money, you are going to make money. Why? Because the market is about to do crazy numbers. Whether you believe this or not, whether you disagree with me or not, this is coming. It's just a matter of time. We all know this. There's altcoin market cap. You're looking at the history from 2014, fine, 2016, 2018. You get this point every time where the market is oversold and the price is close to the historical long-term support. If you bounce from there, which we are doing right now, you have a long way to go, and that's what I just showed you here. What's that long way? Just till this first level of resistance. That's massive. 270x is huge. Not every coin will do that, I agree, but even 27x is not bad, right? So now you put that into perspective and you're like, okay, it still has room. The standard deviation last time was even higher. Fine, let's be conservative and look at these numbers. Let's actually discuss through this and see like, okay, before we become euphoric, before we become like, okay, we are going up, what's the reality? If you look at the Fed, and what they are doing and the inflation number, you actually get to see a story there, right? So you don't want to be trapped inside this run up if it's a fake run or a bull trap, right? So stay with me, we are going to go through that. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. If you have seen this particular video, you already know, like, okay, when the rates go up because of the inflation, what crypto market does. So historically speaking, we get a difference than you actually think. And that's one of the reasons why we actually focused last video heavily on that. Right? We actually wanted to show you guys how the market actually reacts, because a lot of people here are thinking like, okay, crypto market is going down. But if you really know the history of what crypto market has done till this point, oh, your perspective changes. At least mine changed, right? And a lot of people who watched that particular video told me the same. Now, look at this. The inflation rate for the May actually came out early June. For June, it will come next month, right? July 13. So right now, the Fed hike, it is based on the May inflation, which just came out in June. So don't get confused here. The June inflation will come in July. Fine. And July's inflation will come in August. But based on June's inflation, Fed is again gonna push the interest rates higher, which they have already talked about here. Fine, they're going to think about a 50 to 75 basis points increase next month. But if the inflation is higher than that of May, imagine that the inflation is coming like 8.7 or 8.9. The Fed is going to go do 100 basis points. At that point, fine, if they're doing 100 basis point, okay, now the market will start to slow down. Why? June, they already increased 75. July, they're going to increase 100. Imagine that is the case. Now the market reaction would be slowing down because of the first increase in June, which will show up in July at least, hopefully. If that's the case, the inflation number which is coming out in August will literally show you that, okay, inflation is slowing down at least. Now that will be a sense for Fed to say, okay, we are not going to hike 50 to 75 or 100 basis points. Now we're going to do 25. Imagine the market was thinking like, okay, it can be 100 basis point, and it came out to be 75, and the market is still holding and it's slowly grinding back up. So if we reach a point where Fed is saying, okay, it's only 25 basis point now and we're going to stop this there. Now midterm elections are coming. Fine. So I don't think they're going to continue hiking this till that point. I think they're going to pause by August or September, saying the inflation is slowing down. That is like 3-4 months window for the market to actually move up. Now, if you're looking at the stock market, say this is Dow Jones. And as we've discussed before, we are hitting the trend line support and we are showing that we are slowly bouncing. This can be a real bounce or a fake out, depending upon what the price does at this range when it come back. This is a previous support. So if you can't break through this one, you're going to go to the downside. Fine, there is no doubt in that. Now the only positive stuff which you can get there as a pattern analysis is that you can do this and then go back up. Fine, but now we are looking at the S&P 500. Okay, what is S&P 500 doing? It's also at the support. It did the same stuff before. It came to the bottom, bounced, retested that, got rejected. We talked about that before, right? That's the possibility. And it did do like that. Now, we dropped heavily and we are at the bottom after the inflation numbers. So next month, if you are in this market, you are waiting for July 13th. If you are looking to buy more and you are like, okay, I'll get the funds early July, wait till July 13th. If the inflation numbers is going to be higher, the market may respond like this time. It may go down because they'll know like the Fed is going to go crazy the following hike. Now, if you take that properly, okay, fine, you're still waiting for the market to do something, and that will most likely be with the next inflation numbers. So now, you're coming back to the crypto market, fine. Okay, we talk like, okay, there is a 270x possibility in the altcoins. And when the price is down like this heavy, most of them can't even think about 100x or even 10x. Yeah, they won't even consider that. Now look at this. This is XRP BTC pay on a daily, showing you we are continuously going up. Last 3 days, it's great, it's good. So you're like, okay, we are bullish, we are going up. Fine. It's not that time to be super bullish. Just zoom out and see where we are. Okay, okay, fine, you understand something. No, that view is not enough to understand something. You're like, okay, we are consolidating here. No, that's not enough. You need to zoom out and see where we are. We are close to the bottom. You can see a lot of new coins also doing something similar in different time zones. You're looking at daily, 12 hour, 4 hour, and you get to see something similar. If they are bouncing from here, that means they have a long way to the upside. Now keep this in mind. On a daily, your RSI is pumping crazy to the upside, breaking all the previous resistance points. That is actually a great news. Fine. That is on a daily. So now you go on to a 3-day chart to actually look like, okay, fine, I actually understand. On a daily, we are starting to become bullish. Fine. What about 3-day? You're closing to a resistance. Now this is why we always say, don't just become euphoric watching short-term charts. Now daily is not that short-term, but you need to look at the macro as well. So yeah, you have a little bit more room to run to the upside on a 3-day chart. Fine. Okay, you get the point. Now you're slowing down, you're moving on to a weekly chart. You get to see similar perspective. Okay, it has a little bit more room before it hits a big resistance. Now, on the other side of this, what does this actually mean? Okay, on a weekly, you do have a little bit more room to go to the upside before you hit a major resistance. So on the price side of this, you just go look at like, okay, where will we have a breakout? Whether we can break higher. Because here, the price is closer to the resistance than the RSI. So if the price is breaking higher, you again have the 200-day moving average as a resistance along with the horizontal resistance, right? This particular area will be acting as a resistance because it acted as a resistance before and a support even before that. So that zone is going to be a hard area to pass through. Once XRP surpass that against BTC, okay, that's going to be a monster rally. But we don't know when it's actually going to do that. Right now, what we are looking at is, okay, we broke to the downside. That's not a good view for XRP in price terms. If we are able to come back above this range, that's great, meaning buyers just rejected the lower prices, saying, okay, we are buying heavy, and sellers, they're like, no, fine, I'm not selling my XRP for this price. Right? There's a lot of confusion in that side of this, right? The supply demand. And last time, I was talking to our members and we tried to explain that in detail with live examples. Now you understand, like, okay, fine. Okay, that's sellers and buyers. Not every seller is ready to sell your XRP at this price. Ask yourself, will you sell your XRP at this price? Mostly, you'll say no. Then, if a new buyer is coming to buy saying, okay, the price is lower and you're not selling your XRP, then basically the price has to go up to find another seller who's like, okay, I'll sell at 0.5, right? Automatically it slowly goes back up. That's the market dynamics. If that happens and we are coming back to retest this 200-day moving average close to 0.5, that is great. You're back inside this trend. We reject the back trend, meaning we reject that the price is going to go to the downside. The market completely reject that. But if you come higher and you get rejected at 0.39, that's a bad story for XRP. Because this 0.37, 0.38, that range is going to be another resistance. One, then you already have a resistance line running. So if you don't get through that 0.39 mark, that's actually a bad story for us. But if you do, now 0.55, 0.79, 0.9, you have higher resistance to target. But the first stuff you have to keep in mind is this one. Now, these are all short-term market fluctuations, which you are eyeing. Okay, fine, we broke this level, we need to retest this. If during the retest you're breaking higher with the market sentiment changing, that's bullish, fine. But ask yourself one question. Why did you actually buy XRP? Or even when the market is down right now, why do you still hold it? How many other assets do you have in your portfolio? Have you done the same due diligence for all those assets? Like the basic question, if you are entering a stock market, you look at different stuff, right? Where the company is in, what are the barriers of entry, a lot of basic questions which you fill before you buy that. Right now, even before the actual buy goes in, you actually go look at the PE ratio, you go look at the net income, you go look at the net cash, operating income, right? You look at a lot of different stuff along with the debt. Fine. So in crypto market, how do you do that? And have you done that? Because if you have done that procedure before you're buying your assets, now you really know you don't actually care unless these points which actually made you buy this asset changes. If that's not changing, it's just a price. It's the noise in the market. And that's how it actually happens. If you actually go listen to psychology of money, you just have to listen to this, psychology of money. And you're like, fine, okay, that's a book which talks about the money, all these stuffs. And it kind of clarifies you what to do and what not to do. And if you combine that with the information given by Howard Marks in his book, Mastering the Market Cycle, Turning the Odds on Your Side, that's going to be gold, right? If you are in the market as an investor and you're going to stay here as investor for a long period of time, this information is going to give you pumps. Why? The Bitcoin dominance is going down. Most likely you are here because you don't have Bitcoin and you're mostly heavy in XRP. Now, when the Bitcoin dominance goes down, and if it's not bouncing, that's great for altcoins. If you're in that altcoin market, this also goes in. Okay, you are at a territory where you are now obliterated in your portfolio. Take this. RSI is at the bottom, the price is at the support. You should be down 60, 70, 80%. But if you still have your assets, that doesn't matter. You can buy more if you want to average down. You have all those options. But if you are leveraged, you're kicked out of the market. And that's the hard part. Now, say if you are like 50% loss and you got that 50%, what you have to do is buy back in. Because the saying goes like this: buy when there is blood in the streets, even if that's yours. And that's the only way you're going to make money at the right time. If you have, close your positions way back when XRP is 0.5, and then you bought back there with leverage and the market drops to 0.39, 0.3, you're done. You're kicked out of the market again. So don't do that. Don't go leverage, because when you're leveraged, it's not the actual asset you own. You're just betting against the price of that asset, not owning that asset. Owning that asset is a different story. Even if the price goes to zero and you're not selling it, it's fine. You still have the asset. When the price comes back up, you can sell it. Because this is a market, it can be irrational for a very long time. Now, it's been a long time, 1.5 years without something good in the market, but that's coming. And when that good time comes, you need to be on the right assets. You need to be understanding your risk tolerance. If you go over leveraged and your risk tolerance is not that much, it's going to be bad. If you are young, you have that level of risk tolerance and you are like, okay, I'm fine with 70% risk, that's fine. You can go through that. And if you're like, 30 like me or above that, you're like, okay, I don't have that much risk tolerance. I'm going to go for like 70% fundamental assets, right? I'm going to go for 80% fundamental assets. I'm going to go for 10% high risk, 10% medium risk. I'm going to break this down like that. If that's you, it's fine. That's how things are done, and an empire is built in long run. Rome was never built in a day. It's built brick by brick and it takes time. And if you have that mentality and you're here, you're learning something. And if you are learning something and you're happy about that, please do hit that like button if you haven't done that already. So guys, if you want these kind of updates on a regular basis, you can look at the Patreon. The link is given in the description below, where I actually give my thoughts on different assets and the markets and show you like what to do, what not to do, because there are times often emotions comes into play and you do the wrong thing and bad things come to you. But if that's the first time, okay, you are failing to learn first time. But if you're learning from that mistake, next time you won't do that and you are going to survive this and you're going to make money. Everyone have hard time. Right now, everyone in crypto has that same hard time. You're down 70, 80%. But it's here. If you can think properly, as the market goes back up, you're going to make money. You want to make money? Don't go aggressive when the market is up. Go aggressive when the market is lower. And when the market is lower and you don't have too much cash to put in, fine, just sit it through. It's just patience. So guys, I'll meet you on the next video. Bye for now.